Hello, everyone. Welcome to the Eagle Channel. I'm your host, Dr. Augustine Conte. I'm broadcasting from Australia. The conversation continues as we continue to experience the global crisis. Today, I will look at a simple question. How does a currency respond to a global crisis? Or how does a domestic currency respond when there is a global crisis? To cover this topic, I will be looking at the Australian dollar in reference to the US dollar. So that brings in the concept of the exchange rate, which is the price of a domestic currency in terms of a foreign currency. The benchmark here is the US dollar. Please take note. Now, as I proceed, or before I proceed, I will have to pull up the slide so that we are on the same page. Let me share with you. Let's have a look at this slide. It is all about the Australian dollar vis-a-vis the US dollar, with crisis highlights covering the period 2007 to 2026. Each time there is a global crisis, a domestic currency response, and the response of every domestic currency differs. There are unique attributes of currencies that differentiate a currency from others. Now, in the case of the Australian dollar, if you may, let me just explain that it has behaved as a highly cyclical, global risk sensitive currency over this period 2007 to 2026, closely tracking major economic shocks and commodity cycles. Highly cyclical currency. Yeah. Now let's look at certain key takeaways from this chart to keep it simple and to make the most of the time that we have available. Let's look at the period 2008 2009. This period here, the GFC shock. This is the period of the GFC shock. Now, in this period, the Australian dollar, as you can see from here, it has collapsed, or it collapsed from 95 US cents to 65 US cents, reflecting the global risk aversion and a surge in the US dollar demand. That was the GFC period. Now let's move to the period 2011 to 2012. From here to here to here. This period can best be described as a commodity boom peak. Now we see a surge in the currency to a peak of 1.08 US dollar, driven by strong Chinese growth and Australia's terms of trade boom. In this period is a commodity boom peak. You can see $1.08. Let's move on to 2013 to 2016. Here, 2013 to 2016. Let's see what's happening in this moment. In this moment, we see a prolonged depreciation back towards 70 cents, which coincided with the end of the mining boom and China's slowdown. That's this period. So it's almost 70 cents here. Yeah, you see the sharp decline in this moment, 70 cents. Now in 2020, global health crisis period or moment, we see a rapid drop to 62 cents. You see here, a rapid drop here to 62 cents, followed by a swift rise or rebound. There's a swift rebound here. And this highlights the Australian dollar, the Australian dollar sensitivity to global liquidity and stimulus cycle. So a lot of fiscal stimulus happened here in this moment. So there was a rebound here, as you can see. So the Australian dollar was quite sensitive to that. Now, from the period 2022 to 2026, You can see that the dollar itself has traveled from here. You can see 63 cents to 75 cents range in this moment. You can see that it has traded in this range, 63 cents US cents to 75 US cents, influenced by strong US dollar Fed tightening policy. It was also influenced by, it has been influenced by softer commodity momentum and the global growth uncertainty, which continues to loom in all nations of the world. What is quite spectacular here is that the behavior of the Australian dollar depends on the crisis at any given point in time. We had the GFC, we had the commodity peak, we had the China slowdown, we had the COVID period, and now we have the global oil crisis. But there is a very important summary here based on all that I've explained in this presentation. That the Australian dollar itself is a classic pro-cyclical currency. So it strengthens during global expansions and commodity booms, and it weakens sharply during crises and US dollar driven tightening cycles. That is the best way to describe the Australian dollar. And it sort of gives me an opportunity to start looking at other global currencies or currencies and the world and give an interpretation of how they respond to diverse events or global events that have taken place over time. That's quite important. So, in one of the sessions following, I will be considering another currency against the US dollar and bring an analysis to the viewers so that you get to understand exactly what this is all about. I want to take this opportunity to thank you very much, and we'll see you in the next video.